All right, let's dive into something that's not just changing finance and accounting, but completely rewriting the rules. We're talking about a massive shift here, moving away from dusty old ledgers and gut feelings to a brand new world of standardized data, rock-solid trust, and some seriously smart analysis.
But let's kick things off with a big question. Just imagine for a second, what if we could build a financial system that had zero, and I mean zero, human error? No typos, no missed entries, definitely no fraud. Now that might sound like something out of a sci-fi movie, but it's the exact problem that a powerful trio of new technologies is trying to solve. And to really get the solution, we've got to understand the problem first.
So let's jump into our first section, accounting's age-old problems. And believe me, we're not talking about problems that just popped up with the internet. We're talking about fundamental challenges that have been nagging finance for like 500 years.
What's wild is just how little the core of accounting has changed. Way back in 1458, this guy Luca Pacioli basically invented the double-entry system we still use. Yeah, sure, in the 90s we swapped paper for computers and things got way faster. But now, the rule book is over 4,000 pages long. So while we got speed, we also got this crushing complexity. And all the old vulnerabilities, well, they just came along for the ride.
And these are the vulnerabilities we're talking about. At the very top of the list is just simple human error. One little misplaced decimal point can cause an absolute catastrophe. Then you've got fraud, the fact that someone can go in and mess with the numbers. The whole process is incredibly time-consuming, just endless manual checking. But maybe the biggest headache of all? Inconsistency? You've got 4 different companies, they all mean revenue, but one calls it sales, another calls it income. Trying to compare them is a total nightmare. So how do you fix this mess? You start by teaching everyone to speak the same language.
And that brings us to the first part of the solution, our second section, a universal financial language. See, the first step isn't about some fancy new algorithm. It's just about creating a simple, common language that every computer system on the planet can understand. That language is called XBRL, and honestly, the best way to think about it is like a nutritional label for financial data. It doesn't matter what a company decides to call its revenue in a report, XBRL sticks a standard, machine-readable tag on it behind the scenes. It's basically a universal translator that just ends all the confusion.
And just look at the difference. Before XBRL, you had pure data chaos. All those different words meaning the exact same thing. After XBRL, boom. All those human terms get funneled into one single crystal clear tag a computer can read in a split second. The point is, this simple idea suddenly makes financial data truly comparable, whether it's across companies, industries, or even countries.
And this is not some niche little thing. We're talking about more than 60 countries whose regulators have already adopted XBRL. It's become the new global standard. So, okay, problem 1, data chaos. Check, that's solved. But that leaves an even bigger problem, the problem of trust.
Which leads us right into section 3, building trust with blockchain. So now we have this common language, right? But how do we make sure that the information being shared in that language is actually true and that nobody can secretly go in and change it later?
You know, the 2008 financial crisis was such a brutal wake-up call about what happens when trust just completely falls apart. It made it painfully obvious that we needed a system where trust wasn't just based on some person or institution, but was literally baked into the technology itself.
And that's where blockchain comes in. Now forget all the crypto hype for a minute and just focus on this one simple idea. It's like a digital public notary. It creates one single shared record book that's copied across tons of computers. And the magic is, once a transaction is in there, it cannot be changed or deleted by anyone. It becomes a shared source of truth that's verified by the entire network.
So how does this digital notary actually work? Well, it's pretty much a 4-step process. First, a transaction gets created and sealed with a unique digital signature. Second, it's bundled up with a bunch of other recent transactions into a block. Third, and this is the really important part, that new block gets mathematically chained to the one before it, creating this permanent, unbreakable link. And finally, that whole chain gets copied and checked across the entire network, so it's both transparent and tamper-proof.
The impact this has on accounting is just profound. For hundreds of years, it's all been about double-entry bookkeeping, a debit here, a credit there. But as the source material points out, blockchain moves us to something called triple-entry accounting. So now you don't just have 2 entries, you have a third, public entry on the blockchain that's like an ironclad receipt for that transaction, visible to everyone who's allowed to see it. It basically forces honesty right into the system.
Okay, so let's recap. We've used XBRL to fix the data chaos, and we've used blockchain to fix the trust problem. But in solving those, we've created a brand new challenge. But it's a much, much better problem to have. A giant wave of high-quality, trustworthy data.
We suddenly have access to what everyone calls big data, these enormous, standardized, and totally reliable datasets. And that's an incredible asset. But there's no way any human, or even a team of humans, could possibly sift through all of it to find the important stuff. We need a new tool to make sense of it all.
And you guessed it, that tool is artificial intelligence. The absolute best way to think about AI here is as a super-powered research assistant. It can tear through millions of transactions in seconds. It uses machine learning to spot patterns you'd never see, flag potential fraud, and pull out insights that would be totally invisible to the human eye.
And the effect this has on the actual finance professional is a total game changer. I mean, before AI, you might spend 75% of your day just doing boring, repetitive stuff. With AI handling all that, your job completely flips. Suddenly, 80% of your time is freed up for what really matters, high-level strategic thinking, like predicting market shifts or spotting risks in the supply chain long before they become a problem.
So when you put all three of these technologies together, the common language, the trusted ledger, and the intelligent analyst, you start to get a picture of a radically different and frankly much better financial world.
This is what we're calling the digital shield. Each technology tackles one of those critical, age-old problems. XBRL gets rid of data inconsistency. Blockchain gets rid of mistrust and fraud. And AI solves information overload and helps wipe out those last bits of human error. Together, they create a system that's standardized, secure, and incredibly smart. And what's so crucial to understand is that this isn't about replacing people. As our source material concludes, it's about empowering them. The machines do the grunt work, which frees up human minds for the things we're actually good at: strategy, critical thinking, and solving complex problems. It's a true evolution of the profession.
Which leaves us with one last, really interesting question to chew on. As technology creates this financial system that is more accurate, more transparent, and more intelligent than anything we've ever had, the value that we as humans bring to the table completely changes. When the machines are managing the data perfectly, the real work of the human mind becomes asking the right questions.